Hello and welcome to our latest video. As we are coming to the end of September 2021 and things are looking as though they are starting to return to somewhat normal after the global pandemic, I thought it worth taking a little bit of time just to review what a roller coaster the last 18 months have been in terms of the housing market and the impact on property investors and landlords. And also to take a look at what might be coming ahead in the coming months and years. I'll just do a little quick introduction to myself. So I'm Sharon Mashan. My company is the Property Management Programme. I started investing in property with my husband and business partner the second time around in 2011. After some professional property training, we started purchasing using the momentum investing strategy and moving on to managing significant refurbs. Over time, that led me on to helping overseas investors. We've hosted hundreds of overseas investors in and around the Northwest, which is our investment area, and we've helped a lot of them purchase property. We now, through our sister company, Foxdog Properties, manage a lot of that property on their behalf, as well as our own portfolio, and also helping UK-based landlords and investors. Now, as a result of our connections in Asia, in Hong Kong in particular, we went to Hong Kong in 2019 and held a week-long series of seminars for people interested in investing in UK property, which proved very successful. Back in the UK, I am also a resident expert with Asana. So Asana is an independent property meet. I'm a regular speaker there. Their meetings have gone online during the pandemic and we hope to get back face to face as soon as possible. So during the last 18 months, I've been very busy as well, having launched our new business, a property management programme. This offers a standalone resource, an ultimate guide, we call it, which is a done-for-you end-to-end property management process together with templates and checklists, everything you need to manage your own property. And for those people who want more intensive support, we also have a 9-month guided learning programme, so you can learn in detail how to manage your own properties, be compliant on the right side of the law and manage your properties profitably, or at least be an informed customer if you are appointing an agent to do the work for you. As I'm sure we all know, agents are not all created equal, so it really is worth understanding your responsibilities, as essentially the buck stops with you when things go wrong. It'll be you picking up the bill and going to court if your agent fails to discharge your responsibilities appropriately. So it is really important that you understand what you're getting into with property management. Now, as a result of developing this business, I've been asked to guest on several podcasts over the last 18 months. We also have our YouTube channel, PMP TV, which is free to subscribe to, and we regularly post videos there. And this video will be in that library for you to access. These are short videos you can usually watch in 5 or 10 minutes over a quick cup of coffee, with lots of relevant information about the property industry and to help fellow property investors. And finally, I'm most excited that I've been asked to be a mentor with a training organisation called Your Freedom Empire. This again helps overseas investors invest in the UK, so I've got lots of experience in this area which I can bring to share. And I'm currently working with a group of Swedish investors to upskill them, particularly in helping them to invest in HMOs. So let's take a quick look at what has, as I say, been a roller coaster ride over the last 18 months. If you cast your mind back to March 2020, when we first heard of lockdown and the pandemic, the economy and everything was shut down, put into lockdown. And quickly thereafter, the Coronavirus Act came into force. This is a wide-ranging act. It doesn't just cover housing, but I'm just going to focus on the housing aspect, which is relevant to us. But essentially, it covers all aspects of government policy in relation to the pandemic and allows them to put into place the various different policies that were announced on the daily press briefings at that time last year. And what it meant for us as investors was that initially the housing market was closed for the first 3 months of the pandemic lockdown. Now, fortunately, the housing market opened up again in May last year and has really been open since then. There are obviously COVID secure guidelines we need to work within, but as an industry, we perhaps haven't been as hard hit as other industries like hospitality and travel, for example, many of which are now only just opening up. What was an issue, however, is that courts were also closed at that time. So that means you couldn't go to court to enforce a Section 8 or Section 21 notice in order to regain possession of your property. Now, effectively, tenants had carte blanche to stay in your property. There was no consequence of them damaging the property, antisocial behaviour or not paying the rent. The court closure was extended several times throughout last year until courts eventually reopened at the end of September. Now, even though courts opened from October, that still did not help investors and landlords, as although courts could now uphold Section 21 and Section 8 notices, there were separate regulations which then banned bailiffs from actually carrying out or implementing these notices. These regulations to prevent evictions were extended initially over the Christmas period and then again into 2021. These fortunately have now been lifted. However, it's likely there'll be significant delays in the housing courts if you are looking to enforce a Section 8 or Section 21 notice. Throughout the course of the year, notice periods for both Section 8 and Section 21 were initially extended to 3 months. A Section 8 notice is usually used for rent arrears, and the notice period was usually 2 weeks. That was extended to 3 months. A Section 21 notice went from 2 months to 3 months. Later on, during the pandemic, the notice period was extended to 6 months for all notices, and that has been in place for nearly a year. It's only just now, as we head into October 2021, that notice periods will be reverting back to their pre-pandemic levels for all types of notices. Now, you may or may not have noticed, depending on how active you were in terms of moving tenants in and out of your properties last year, that the insurance industry actually suspended rent protection insurance for a period last year. This type of insurance was just simply not available for many months during the early part of the pandemic, as the insurers simply had no idea, no way to calculate the risk, so they simply withdrew from the market. I'm glad to say many insurers have returned to the market. There was a significant increase in premiums when they did, however, and initially the cover that was given by this insurance was capped at a 6-month period. Now, given the extended notice periods and closures of courts, a lot of people did wonder whether this 6 months cover was actually worth paying the premium for. But I am seeing policy cover being extended now. Our broker certainly has a new policy. The cost has come down slightly and the cover has been extended to 12 months. What didn't help last year trying to regain possession of their property was some new civil proceedings, and these were introduced in the back end of last summer, and these were I think introduced to coincide with the reopening of the housing courts at the end of September. Effectively, what this meant is if you had a Section 8 or Section 21 notice already in the pipeline with the courts, you had to write to the courts and the tenants and formally let them know you wanted to reactivate these notices and you wanted to continue with them. Failure to do so would mean that you'd simply lapse, the notices would simply lapse and the courts would not take any action. So I'm presuming that this was a way of the court prioritising and trying to deal with their backlog. Another aspect of the civil proceedings was that the guaranteed period between issuing a notice and that of a hearing was suspended. Previously, if you issued a notice, you'd get a hearing within 8 weeks. That 8-week deadline was taken away and could have been any period of time to sort the court's availability. Again, another way of them dealing with the backlog. A glimmer of hope at the time was the announcement of Nightingale courts. This is where courts were set up temporarily in public buildings such as theatres or libraries to try and get through the backlog. I'm not really sure how successful that's been, but as far as I'm aware, I think they're still in place and will be needed for some time to come. The pandemic did not stop the ongoing pre-planned legislation changes that impacted landlords last year. Last summer, we saw the Homes Fitness for Human Habitation Act come into force. This means that tenants can report rogue landlords directly to courts. They no longer have to rely on complaining to the council and waiting for the council to take action. As I'm sure you can imagine, some councils are more proactive than others. It is a bit of a postcode lottery if a tenant is dealing with a road landlord. New EPC regulations came into force. This means that all properties, including existing tenancies, the property needs to be rated E or above for it to be legally let out. There were some regulation changes around electrical inspection reports as well. Now all properties, not just HMOs, need to have a valid electrical inspection report carried out on the property before each new tenancy. This needs to be renewed at least every 5 years or at the frequency stated on the report or at the change of tenancy. There were a couple of tax changes too. The Section 24 tax change, which means that if you own a property in your own name, you now can't count mortgage interest as a tax deductible expense. This fully came into force last summer. It's been gradually introduced over the last couple of years, but now is in full force. This means effectively you're being taxed on turnover rather than profit on your properties if you own them in your personal name. Now, it doesn't apply if you own properties in a limited company, and that's one of the reasons in recent years why people now set up a limited company within which to hold their properties. The other tax change you might have missed last year was around capital gains tax. Now, capital gains tax has to be declared and paid within 30 days of the sale of the asset. This is in stark contrast to previously, where you could, depending on the timing of the sale of your asset, have up to 22 months to be able to pay that capital gains tax. The Tenant Fee Act came into full force last year as well. The year before, when it was enacted, was just for any new tenancies and fees couldn't be charged to tenants. Last year it came into force for all tenancies, so you can no longer charge a tenant to cover any of your admin costs or time, either at the start of the tenancy or during the tenancy. It wasn't all completely bad news last year. I'm not saying the good news outweighs the bad news, but there were some positive aspects. The main one being furlough and other financial support available to a lot of the population. We found that most of our tenants either continued working because they were in key worker roles or they were paid furlough and therefore they could still pay the rent. During the whole pandemic, we literally only had 2 people, which equates to less than 1% of people that we managed that got into difficulty. This compares very favourably with the 9 or 10% of the industry average of tenants in arrears, and this percentage level was pre-pandemic levels, so we're yet to wait how many people have been affected in this last year. This is a great vindication for our robust vetting process, but also thanks to the financial support packages that were available for people. Mortgage holidays were announced as well last year, so if you're struggling to pay the mortgage because your tenant isn't paying the rent, you could get in touch with your lender and ask for a mortgage holiday. Towards the end of last year, the government announced a Green Homes Grant. This was really only open for about 6 months, but we were successful in helping one of our clients get some money, some funding to improving the energy efficiency of their property under this grant. It's now closed, but it is worth understanding what it was and how it works, as there are likely to be more green deal style grants going forwards, given that EPC ratings look to be being increased to grade C or above by 2025 in order for you to let your property out. There is a separate YouTube video on PMP TV on the Green Homes Grant, and also a separate video on the case study of the client that we were successful in obtaining grant funding for, so you can check these out on our playlist. And I'm sure you're all aware of the reduced stamp duty that was brought in last year to assist with the housing market. This does seem to have caused a lot of competition in the market, with the market being very hot. There's definitely more demand than supply, which is pushing prices up. I'm hearing of cases where people are now paying over the asking price for properties. The reduction in stamp duty is coming to an end very soon, and it will be returning to pre-pandemic levels. Last year there was also an announcement of reduction in VAT for the hospitality industry. So for those of you working in or interested in the serviced accommodation area of property investing, this hopefully helped your business during that time. As we're coming to the end of September, it does look like we're starting to see the return of normal or some sort of new normal. But what does the future look like? In the short term, the financial packages such as furlough, reduced stamp duty and reduced VAT are coming to an end. Notice periods are reverting to their pre-pandemic levels, and housing courts are open with bailiffs now permitted to enforce notices. One thing that we want to be on the lookout for soon is something called the Renters Reform Bill. This was introduced about 2 years ago and was sidelined as a result first of Brexit and then of the pandemic, but it will be coming back shortly. The government is looking to produce a white paper any time now. The upshot of this is that the government are looking to get rid of Section 21 notices in England. In my view, this is very likely to happen. It's already happened in Scotland a few years ago, so there is a precedent for this. Effectively, it will mean the end of assured short-hold tenancies, and tenancies will return to just short-hold tenancies. It will be quite difficult to remove the tenant from the property except in certain circumstances. As part of the Renters Reform Bill, the government is looking to potentially reform the housing courts and also the reasons why you can get your property back. The idea is to try and make sure that it's not taking the year or more it currently does, going through the current system to regain possession of your property. So watch this space. Slightly longer term, there'll be an impact from further changes to EPC ratings. There was a consultation around EPC ratings last Christmas, and I mentioned this earlier. There's an indication that from around 2025, rented properties will need to meet grade C or above to be legally rented out. If you're looking at purchasing and refurbishing properties between now and then, it's really important now to build in any efficiency improvements you can do so that you don't have expensive retrofits in a few years' time. So I'm going to draw to a close there. I'll leave you with my contact details. Do check out our free resources on our YouTube channel PMP TV. You can sign up to a playlist so that you get notified as we post new videos. You can also join our Facebook group, which is called Investors Circular, again for free information. And you can also look me up on LinkedIn and stay connected that way too.